Hello everyone. Now let's see all the theoretical chapters, starting with exemptions, refunds and recoveries. Then we'll go to penalties and other chapters, advanced ruling, settlement commission, appeals and revision. Lot of chapters are there. But out of these chapters, you can expect, all these chapters inclusive, you can expect not more than 5 marks question. Okay. So therefore, these chapters have to be read once thoroughly, but just read once, try to remember the concept, that's it. Don't go much into detail, don't waste much of time, because all these chapters till end will cover not more than 5 to 6 marks. Okay, great. So let's start. Exemptions, refunds and recoveries. So first we'll start with exemption. Section 25 is there, power to grant exemption. Now in this you just remember 3-4 points. Okay, so I'll tell you those 3-4 points first and then we'll read. Firstly, the exemption can be general or spatial. General means that it is available to anyone who comes under the purview of the notification. So government will issue a notification granting a general exemption, and whoever satisfies the conditions of that notification are entitled for the exemption. Spatial exemption, on the other hand, is given to one person like Farooq Haque. So government will issue a spatial notice, not a notification in the official gazette, but a spatial notice to me in my name that Mr. Farooq Haque, you have imported a big car, Mercedes top end car of 7 crores, and the government, considering it as a fit case, how fit case I don't know, but considering it to be a fit case, grants exemption from customs duties. So that order, spatial order, is only for me, not for you, not for anyone else. It is only for me in my personal name. So this is called as spatial exemption. So general, spatial. Understood? First 2 points. It can be general, it can be spatial. Secondly, these exemptions can be from whole of the duty of customs or part of the duty of custom. Obviously, it can be full exemption or it can be partial exemption. Thirdly, both of them, the general exemption can be whole or part. Specific exemption, the spatial exemption, can also be whole or part. Thirdly, they can be subject to conditions or absolute. So absolute or conditional. Exemption can be absolute or conditional. Absolute means without conditions. You just get the exemption. Say for example, government will say that import of pens into India are totally exempt from not GST, customs duty. Totally exempt from customs duty. So whoever imports these pens are exempt from customs duties. No conditions attached. Okay, so that is called as absolute exemption. Absolute. And second is conditional. Conditional means you have to satisfy these following conditions. There can be one condition or there can be a number of conditions, and whoever satisfies these conditions will only get the exemption. So they are called as conditional exemptions. So it can be absolute, it can be conditional. Now the important point to remember is that if the exemption is absolute, means without conditions, it is mandatory. Court says absolute exemptions are mandatory, means you have to claim them. But if the exemption is conditional, then it is optional. You may take, you may not take. Okay, so these are the important points to remember in this section. And now let's see. So what it says, the central government is satisfied. If the central government is satisfied that it is necessary in public interest, so to do. So first one is general. You write G. You just write G. G means general exemption. By notification in the official gazette, exempt generally, either absolutely or subject to conditions. So as I told you, it can be absolute or conditional. Subject to conditions to be fulfilled before or after clearance. Some conditions are to be fulfilled before, some conditions are to be fulfilled afterwards. So conditions can be both ways. It may as may be specified in the notification, goods of any specified description from the whole or part of the duty of custom leviable thereon. So exemption can be from whole or part, absolute or conditional. Okay, so that is the first one, general exemption. How will it be given? By notification in the official gazette. Secondly, if the central government is satisfied that it is necessary in public interest so to do, underline public interest so to do, it may by special order. So this is special exemption. So write S, special exemption. In each case, so this will be case to case. Importation by Farooq Haque is exempt, importation by Ambani is exempt, importation by Adani is exempt. So all big shots get exemptions, but not for you guys, not for the middle class people. Yeah, it happens like that. You know, Sachin Tendulkar got a gift of Ferrari from Michael Schumacher. So when the Ferrari came into India, it was subject to import duty. But as you know, cars attract very huge amount of import duties, more than 100%. But he was Sachin Tendulkar. So government issued a special order for him, granting full exemption to that Ferrari. So you have to be a big shot to get these exemptions, okay? So exempt from payment of duty under circumstances of exceptional nature. Now what were the circumstances of exceptional nature in case of Sachin Tendulkar? I don't know. He is a big shot crorepati, Arabpati you can say, having thousands of crores of assets and net worth, and still there was exceptional nature and he got exemption. And if you, a middle class person, and me of course, I am with you. That was only an example, but in reality I am with you. So if we get some gift from our friend in US, like Trump is my friend, so he gives me something, maybe a mobile phone, it will attract customs duties. And will the government give exemption to me and you? Not at all. But anyways, to remember, you write down there Sachin Tendulkar, S for Sachin, S for special. Okay. Any goods on which the duty is leviable. Now it is not mentioned here, but again this special order can also be absolute or conditional. But if it's a special order, then it normally is absolute. Otherwise, if it is a conditional order, then why will it be given? Why would the government say that if you satisfy these conditions, then we'll give you exemption? No, if they are issuing it to me personally, then obviously it will be absolute. So it's like that. Then 2A says that the central government may, if it considers necessary or expedient so to do for the purpose of clarifying any scope. Now see, what subsection 2A says, I'll tell you first. Government issues an exemption notification. In that exemption notification, goods of a specified description are exempted. For example, government says pencil is exempt. Now they only mention the word pencil is exempt. They don't mention the word that it is a lead pencil which is used by students in schools. Okay, so they don't mention that, they just mention the word pencil is exempt. Now Farooq Haque has imported Apple pencil. What I'll do, I'll go and claim exemption. I'll say that look, this is the notification number so and so which says that pencil is exempt. So I will take exemption on this pencil. If the matter goes to court, means the officer denies the exemption, I'll go to the court and I'll prove to the court that this is also a pencil. Theek hai, it is an electronic pencil, but it is a pencil. Hence it is exempt because government has used the word pencil. So people what normally do is they misinterpret the words which are given in the exemption notification and try to enhance the scope, try to enlarge the scope and claim exemption for those goods where the government did not intend to give the exemption. So then what the government will do? If people start misinterpreting the words and try to claim exemptions for other goods also, then they have no choice but to issue clarifications. So government has a power under this subsection to issue clarification by introducing explanations in the original notification. So they will issue another notification which will say that in notification number so and so issued by us 3 months back, this explanation should be inserted. Okay. So what that explanation does, it specifies the scope. So now they will issue an exemption, a notification, separate notification to modify the original notification by inserting an explanation. And what the explanation says, that the word pencil used in the above clause shall only be taken to mean a lead based pencil and not any other electronic pencil. So they will include this explanation. By inserting the explanation, what the government is doing, it is specifying or clarifying the scope of exemption, so as to disqualify certain goods. So I would say, okay, the government is issuing notification now, so from tomorrow, if I import this Apple pencil, I'll pay tax. But what will happen to the exemption that I have already claimed on it in the past 3-4 months, say for example? So this clause says, the important point of this clause is not just that the government can clarify, but the important point is that whenever these clarificatory amendments are inserted, clarificatory amendments are not something like another clause is inserted, no, not like that, or some proviso is inserted, not like that, but only clarifications. Clarifications are given by way of explanations. So if any clarificatory explanation is inserted, it will have retrospective effect. That's the beauty of this subsection 2A. It will have retrospective effect right from the date when the original notification was issued. Okay, so whoever has taken these benefits by misinterpreting the clauses will be denied the benefit. Okay, and they will be required to pay the tax, even for the past exemptions that they have already claimed. So it will have retrospective effect right from the day when the first notification was issued, the original notification. So now you can read, you will understand. So it says, the government may, if it considers necessary or expedient so to do, for the purpose of clarifying the scope or applicability, means to whom it shall apply and whom not apply, of any notification issued under 1 or the order under 2. So both of them can be modified, the general exemption as well as the special order. Insert an explanation in such notification or order, as the case may be, by notification in the official gazette at any time within 1 year. Underline this point, 1 year. So if this explanation is inserted within a period of 1 year from the original notification, then it will have a retrospective effect. Okay, but if it is issued after 1 year, then if the amending notification inserting the explanation is issued after expiry of 1 year, then it cannot have retrospective effect. Then it will have only prospective effect. Understand? It will have prospective effect but not retrospective. But if it is issued within 1 year, then it will have retrospective effect. So say, see here, it says, or order, and every such explanation shall have effect as if it had always been a part of the first such notification or order, as the case may be. Understood? It will have effect as if it was always a part of the first notification. Means this explanation is inserted with retrospective effect from the date of the original notification itself. Write on your retrospective effect. Understood? Simple. Then subsection 3 says that the exemption under subsection 1 or 2 in respect of any goods from any part of the duty of custom leviable thereon may be granted by providing for the levy of duty on such goods at a rate expressed in a form or method different from the form or method in which the statutory duty is leviable. Statutory duty means as per Customs Tariff Act. It is a very simple thing. What it says is that if Customs Tariff Act is mentioning ad valorem duty, it had specified ad valorem duty at the rate of 10%. So the exemption notification can modify, can change the form and method also. Means the exemption notification can specify specific duty, 2 rupees per kg. So instead of paying 10% ad valorem, you pay only 2 rupees per kg. So they can convert ad valorem into specific rate or maybe tariff rate based duty. So they can change the form and method, especially when it is a partial exemption. If it is a full exemption, then there is no need to change the form or method. But if they are giving a partial exemption, then instead of paying 10% on value, you pay only 2 rupees per kg. So such changes can be made. But the point is that when they are giving your partial exemption by changing the method and form, then this new method and form, the new duty, cannot be more than the statutory duty. And if it is more, then you have to ignore the exemption notification and you can continue to pay the statutory duty. Now you'll ask me that how this can happen. If they are giving partial exemption, then how the exemption duty, the partial exemption duty, can be more? See, I'll tell you how. Say for example there was 10% ad valorem duty and the importer was importing the goods at, I'll take two examples. In the first case, transaction value of 1000 rupees. In the second case, the same goods somebody else is importing at a transaction value of 100. So this statutory duty, I'll write SD, the normal custom duty that they were paying was 100 at the rate of 10% or 10 as the case may be. Okay. Now these are the prices of 1 kg of unit of goods imported into India. Now if the government says that instead of paying statutory duty at 10%, you pay only 30 rupees per kg. So this is the exemption notification which says that you pay 30 rupees per kg. So they are changing the method and form and saying that now you pay only 30 rupees. So this person number 1 who was importing at 1000 and was normally paying 100 will now pay only 30. So for him it is partial exemption. He is benefited. But what about this guy? He was importing the goods at 100 rupees only and paying 10 rupees as duty. Now the government has said that you pay 30 rupees duty. So that guy will be confused that I'm getting exemption. Yeah, I'm getting exemption. But what is the exemption? Instead of 10, I'm paying 30 now. I have got exemption. So in that case, he will continue to pay 10 only and this exemption notification will not apply to him. So he continues to pay 10 rupees duty. Okay, understood? Interesting point, na? So that is given here. See, we have studied till here that they can prescribe a different form and method, different from the form and method in which statutory duty is leviable, and any exemption granted in relation to any goods in the manner provided in this subsection shall have effect subject to condition that the duty of custom chargeable on such goods shall in no case exceed the statutory duty. Understood? That the new duty charged shall in no case exceed the statutory duty. So if the government has now specified 30 rupees and if 30 rupees is exceeding my statutory duty of 10, then this notification is not applicable to me. I will continue to pay 10 rupees. Understood? Great. And the explanation says that form and method means the basis, as I told you that earlier it was valuation and now they have prescribed on weight basis, that is specific duty. So valuation, weight, number, length, area, volume or other measure with reference to which the duty is leviable. Then every notification shall, unless otherwise provided, come into force on the date of issue by the central government for publication in the official gazette. So they will come into force. All notifications will come into force on the date of issue. Okay. And it can be published later on, but it will come into force right from the date of issue. Notwithstanding anything contained in this act, no duty shall be collected if the amount of duty leviable is equal to or less than 100 rupees. This is called as general exemption. If the custom duty, like for example you have imported a chocolate into India and the chocolate is chargeable to duty, and if the duty comes to only 56 rupees, it will be exempted. No duty collection if the duty is less than 100 rupees, equal to or less than 100 rupees. Simple. Then next we will see section 25A. This is a newly inserted section. Finance Act 2018 has inserted it. And what it says, In fact, two sections have been inserted, 25A and 25B, inward processing and outward processing exemptions. Now, to understand these two sections, you have to first recall section 20. Section 20 we had seen some time back, long time back you can say, in which we had seen that if any goods exported out of India are re-imported into India, they will be deemed to be fresh imports and they will be charged to normal duty. Remember? Yes. Now in that, there were two exemption notifications earlier. We have not studied, I have not given it in the book. One was notification number 94 by 96 and another one was 158 by 97. These two notifications were issued under section 20 to exempt certain goods which were imported into India, means exported goods re-imported into India. So there were two exemption notifications. One of them was for this purpose. So now they have incorporated a section, a separate section for giving exemption instead of that notification. So what that notification said is the same thing which this section says. So let's read this section and understand it. It says that where the central government is satisfied that it is necessary in public interest so to do, it may by notification exempt such of the goods which are imported for the purpose of repairs. They are imported for the purpose of repairs, further processing or manufacture, as may be specified in the notification, from the whole or part of the duty of custom leviable thereon. Means exemption can be from whole or part of the duty, subject to following conditions, namely, the goods shall be re-exported after such repair or further processing or manufacture, as the case may be, within a period of 1 year from the date on which the order of clearance is made. So now you are getting the point. What is happening? What is the situation? We are importing some goods. Now that is not a permanent import into India. The goods are coming in just for the purpose of repair or any kind of processing or manufacturing. So we are bringing the raw material into India for manufacturing, and then we will export the finished goods out of India. Or we are bringing in some goods for repairs, for further processing, and then they will be re-exported. So goods are not going to stay back in India, they are going to be re-exported within a period of 1 year from importation. So once the goods are cleared for importation, from there we will count 1 year. Clearance 1 year. So within 1 year they should be re-exported out of India. And the imported goods are identifiable in the export goods, obviously. This is a primary condition, that you should be able to identify the imported goods in the export goods which are going back out of India. Like I had imported say, let's take an example of a motor car company. So what they do, they import the kit, the parts, the engine, etc. from Germany. They assemble a car in India, and after assembly they are re-exporting it out of India into foreign markets. Okay, so when the cars enter for export, we have to show to the officer, look, this engine, open the bonnet, look, this is the engine which we had brought 3.5 months back. So it is identifiable that these engines were imported under this section and the duty was not paid, and now we are exporting these cars containing these engines. So import engine should be identifiable in the car which is getting exported. Understood? Or we are importing say wood from Finland, manufacturing furniture in India and then exporting furniture. So when we will be exporting furniture, we should be able to identify the wood, that this wood which is used to make this furniture is the same imported wood which was imported from Finland. And lastly, such other conditions as may be specified in that notification. So all the other conditions will be notified there, we will have to follow it, obviously. So understood what is happening? So it is called as inward processing. Goods are coming in for processing in India, and after processing they will be re-exported within a period of 1 year. So in that case, government has the power to grant exemption to the imported goods. Okay. Then next is the reverse procedure, 25B, outward processing of goods. So what this says? That notwithstanding anything contained in section 20, see this overrides section 20, where the central government is satisfied that it is necessary in public interest so to do, it may by notification again exempt such of the goods which are re-imported after being exported for the purpose of repairs, further processing or manufacture out of India. So this is exactly the reverse case. We have some goods in India. It might be that we have imported these goods earlier on, like I have imported a Rolls-Royce 5 years back or maybe 6 months back, and now there is some repair required, and Rolls-Royce doesn't have its engineers in India, so they say, okay, send us the car, we'll repair it and send it back to you. So I'm sending the car. So the car goes out of India, it gets repaired in US, and then it is coming back. So when that car is coming back, will you charge the import duty again? No, because it was paid on the first instance when I have imported the original car. The duty was already paid. So why should it be charged again? So the exemption can be granted here. Granted on re-importation. Exemption will be on re-importation of goods that were exported for repair, further processing or manufacture from the whole or part of the duty of custom leviable thereon, subject to the following conditions. First, the goods are re-imported into India after such repair, further processing or manufacturing as the case may be within a period of 1 year from the date of export, clearance for export. So when the car was exported for repairs, so from there it should come back within 1 year. And the goods are identifiable. Obviously, the exported goods should be identifiable in the imported goods. That this is the importation. When the car is coming back, I would show to the officer that this is the same car which I had exported. Look, it is the same car. And such are the conditions as may be specified in the notification, obviously. So a lot of notifications will be issued here under both these sections in time to come. Then moving ahead to section 26, a refund of export duty in certain cases. Now this is linked to section 20. Remember section 20 we had seen. Section 19 was goods imported in set, and there was section 20 that if you import the goods and then re-export them and then again import them back, then the duty will be chargeable at normal rate. But then there were notifications that instead of charging the normal rate, we will consider it to be Indian goods only, as if not exported, right? As if not exported out of India, and they will be considered as our own goods, and therefore you will be required to pay the export benefits. Remember, whatever export benefits you had received at the time of export, you have to refund it back to the government in the name of import duty, right? We've seen that point. Yeah, so this section is linked to that section. So I'll explain you how this section applies. Okay, so what it means, that if a person, maybe Mr. X, had exported the goods, okay, and suppose at the time of export he had paid export duty. Very few goods are liable to export duty, but suppose his goods was liable for export duty. So he had paid export duty of 120 rupees. Okay. And apart from export duty is a custom duty that you have to pay at the time of export. But he had got certain export benefits also. Like his GST was exempted, because if you export the goods, your GST is nil. So exemption of GST and other export benefits given to him by the government. Okay, various other benefits are there. So he got total export benefits of 310 rupees. Okay, now if these goods are re-imported into India, then what happens is that if they are re-imported, then government says that okay, you pay import duty which is equal to the export benefits that you had taken. Okay, so these export benefits that you had got will be charged now as import duty. So your export benefits will become import duty. So you'll have to pay 310 rupees. Okay. So the assumption behind this is that you consider as if the goods were neither exported nor imported. So if they are not exported, neither imported, then these export benefits you wouldn't have received. So pay it back to the government. So when government says that you pay 310, then you can also go and say, nah, that what about that 120 that I had paid you before? If you are considering it not export, not import, then refund my export duty, this export duty of 120. So that 120 will be refunded to you now. So you can take refund under section 26 of 120 rupees. Understood? So this is given here in section 26. You will get refund of 120 rupees of export duty that you had paid at the time of export. So if you export certain goods and pay export duty and then you re-import the goods again, not by way of resale, say for example we have sent the goods to a branch outside India and now since they are not sold there, they are re-imported into India, then you are entitled to refund of that export duty paid. Understood? So that is it. Very simple point. See that where on the exportation of goods any duty has been paid, such duty shall be refunded to the person by whom or on whose behalf it was paid, if the goods are returned to such person otherwise than by way of resale. So it is not that you have sold off the goods and then you are repurchasing and bringing it back. It should not be like that. It should be that you have exported the goods for sale, for example, for display and all, and now you are bringing it back into India. So you will get refund. Then the goods are re-imported within 1 year from the date of exportation, should come back within 1 year. An application for refund for such duty is made before the expiry of 6 months from the date on which the proper officer makes an order for clearance of goods. So as soon, clearance means import clearance. So as soon as you get the import clearance, your bill of entry is passed and cleared, within next 6 months you can claim the refund. So you'll have to file a claim within 6 months from import clearance. Very simple section. Then next is 26A, refund of import duty in certain cases. This is also very simple. That where on importation of goods capable of being easily identified as such imported goods, any duty has been paid on clearance of such goods for home consumption, such duty shall be refunded to the person by whom or on whose behalf it was paid if the goods are found to be defective. Underline defective. So we import the goods, we pay the duty, we remove the goods from the customs station, we bring it to our home, and after bringing it to our home or business place as the case may be, we open the parcel, we open the box and find that the goods are defective. These are not the goods which I had intended to import. Like it happens in Amazon. You can return the goods at any time. Like it happens in Flipkart and all the online portals. We purchase t-shirts, it arrives at our home, we try it, and after trying, if we feel that this is not comfortable, either it is too large or too small as the case may be, or not suiting us, we can just pack it back and return. So this is like that. So if the goods imported into India are found to be defective, okay, defective, or otherwise not in conformity with the specifications agreed upon between the importer and the supplier of goods, okay, the specifications differ. So then what we can do is we can return these goods back. Nahi chahiye, we don't want these goods, we can return the goods back to the supplier of US or China as the case may be, and after the goods have been resent, we can apply for refund of the import duty paid. So whatever import duty we have paid on importation will be refunded to us, provided that the goods have not been worked, repaired or used after importation except where such use was indispensable to discover the defects or non-conformity with the specifications. So you cannot use the goods after they come into India. Like I import a car, a Mercedes-Benz car, and then I use it for 4-5 months, good use, and then I re-export. Then this refund will not be allowed. Then you have to claim the duty drawback. Understood? Duty drawback under section 74, but not here. This is complete refund. So then section 74 may apply, but not this section. This section applies when you have sent back the goods because they were defective, and you have only used it to that extent where you can find out the defect. Okay, not beyond that, not as a normal use. Like I wore the t-shirt, so I have to wear it to find that it is too small or too big. So that much use is okay, that much is fine, but not beyond that. Not that I use the t-shirt for recording and all for 6 months and then I return it back. Not like that. Okay. And secondly, the goods are identified to the satisfaction of the ACDC as the goods which were imported. This is interesting one. You have to satisfy the assistant or deputy commissioner that this t-shirt which I am re-exporting, which I am returning back, is the same that was imported earlier and on which the import duty has been paid. Thirdly, the importer does not claim drawback. So drawback is also similar now, section 74, return of goods. If you bring the goods and you re-export, then you can claim drawback. So drawback and this refund is to a certain extent overlapping each other. Drawback is allowed in any case. It is not just for defective goods, it is for any goods. And this section is specifically for defective goods or goods which are not in conformity with your requirements. So you can claim drawback also. Now if you have claimed duty drawback, then you cannot claim this refund, or if you claim this refund, then you cannot claim duty drawback. It's either of the two. And fourthly, the goods are exported or the importer relinquishes his title to the goods and abandons them to customs department, or such goods are destroyed or rendered commercially valueless in the presence of the proper officer in such manner as may be prescribed. Means you dissipate the goods and within a period not exceeding 30 days from the date on which the proper officer had allowed the goods to be imported, means clearance. So what happens is that now the point is that if they are not suitable for your use, then you re-export them. So refund will be allowed only after the re-exportation is complete. Okay, so either you export it back or you relinquish your title. Suppose the goods are so bad that there is no sense in even sending it back to US or China. So we can relinquish the title to the customs department that I don't want the goods, if you want you can take. So relinquish your title to customs. But in that case the exporter is not going to refund your billed amount. So you can relinquish, but at least you can save the tax. Or thirdly, if it is so bad that it cannot even be relinquished, there is no value left, then you destroy it in the presence of the proper officer. Set it to fire. And this you have to do within 30 days. Any of the things can be done within 30 days. Either re-export or destruction or relinquishment has to be done within 30 days. But of course extension is there. So proviso is there. It says that the period of 30 days may on sufficient cause being shown be extended by principal or commissioner, principal, commissioner or commissioner for a period not exceeding 3 months. And provided further that nothing contained in this section shall apply to goods regarding which an offence appears to have been committed. Interesting. Now if you commit any offence, like you smuggle the goods and so on and so forth, and then when you are caught you will say okay, I am relinquishing my title. So to save yourself from payment of duty you can relinquish your title. No, that is not allowed. So offence, if an offence is committed or appears to have been committed, then this facility will not be given. And then it says the application for refund shall be made before expiry of 6 months. So again the time is 6 months here from the relevant date. And what is the relevant date? That is given in the explanation below. So relevant date is defined as that in the case where the goods are exported out of India, the date on which the proper officer makes an order permitting clearance and loading of the goods for exportation under section 51. So permission of loading, that is let ship order. So from that date, within 6 months you can file your refund claim. This is if you export the goods. Secondly, if you relinquish the goods, then from the date of relinquishment, the day you relinquish it to the customs department, from that day within next 6 months you can file your refund claim. And in case where the goods are destroyed or rendered commercially valueless, then the date of destruction. And third point says that no refund under 1 shall be allowed in respect of perishable goods and goods which have exceeded their shelf life, that is, they have become time barred goods, or what we can say expired goods, like in case of medicines there is expiry, or their recommended storage before use period. Even in case of eatables, food stuff, there is expiry date. Even in case of cosmetics, there is expiry date. So if the goods you have imported into India, and then because you are not able to resell them, the stock is lying with you and someday it will expire, and after expiry you will say that okay, give me the refund because they have become commercially valueless. No. In that case, a refund will not be given. And the board may by notification specify any other conditions subject to which the refund may be allowed. That's fine. So understood, very interesting section. Then comes 27, claim for refund of duty. This is the general section for refund. It defines the procedure for refund, and this section is applicable to all kinds of refunds including duty drawback. So duty drawback is one type of refund. Then two sections we just saw, 26 and 26A, allowing you the refund. And apart from these three, there can be many other cases of refunds, like for example that I have imported goods and by mistake I have paid excessive duty. By mistake, the duty should have been 2 lakhs, but we mistakenly paid 6 lakhs. So when we realize this mistake, we will go and ask for refund. Please give us refund, we have paid excessive duty. So all these refunds are to be claimed under section 27. Okay, so let's see what is the procedure, and here I'll explain you one point before we actually see this section. Concept of unjust enrichment. Now we have discussed this concept even in GST, if you have already watched the lectures of GST, which I hope you must have. And generally the concept of unjust enrichment applies in indirect taxes, because the burden of tax is shifted to the buyer, right? So for example, if I have paid excessive duty, instead of 2 lakhs I have paid 6 lakhs, but then ultimately I have taken that 6 lakh from my customer. So have I paid those 6 lakh from my pocket? No, I have claimed it from the customer. Because it is indirect tax, I have shifted the burden. So I have put it in my invoice and recovered it from the customer. So I have recovered 6 lakhs from the customer and I paid that 6 lakhs to the government, and now I am realizing that 4 lakhs was excess. Who should get the refund of these 4 lakhs? Me. Have I paid out of my pocket this 4 lakhs? Has the burden fallen on me? No. The burden has fallen on the poor customer. So who should get the refund? The customer, and not the importer. So that concept is ingrained in this section. So what you have to do is, whoever claims the refund, suppose if I am going and claiming the refund, I have to prove to the satisfaction of ACDC that the burden has not been shifted to any other person. I have to prove that the burden has not been shifted, that the burden has not been transferred. If I prove that I have taken the burden of tax, I have not recovered it from my customer, then yes, I will get refund of that excess 4 lakhs. But if it is not proved, then the refund would be allowed to the customer to whom I have sold the goods. But that buyer will then have to prove that he has not further transferred the burden to any other person. So means the refund will be given to whom? Refund will be given to that person, the importer or the buyer or the further buyer or the further buyer, that person on whom the burden has finally fallen. He is the person who can claim the refund. And sometimes that person cannot be found. Suppose the billing is, or even if I have billed but I don't have the address of that customer and we are unable to find him, we searched a lot even on Facebook but not able to find, then in that case, now this was a joke in between, the government is not going to check Facebook accounts to find the address of the customers. Okay, but if the customer cannot be found, then the amount will be transferred to the Consumer Welfare Fund. Okay, simple. So that is one concept which is normally asked in the exam. Second point to be studied in this section is the relevant date, because refund claims have to be filed within a certain period from the relevant date. So what is that relevant date? So that definition is given here, and sometimes question is asked on that silly point, what do you mean by relevant date under section 27 of the Customs Act? I call them as silly questions because they don't test your application skill, they just test your mugging up skills, which a CA is not required to do. What's the use of it? You are not supposed to be a library of laws, you are supposed to be a good interpreter of laws. So let's see. Claim for refund. Any person claiming refund of any duty or interest. So duty or interest is also given, because sometimes we pay a delayed duty. So when we make a delay in payment of duty, we have to pay interest also. And later on it can be found that the duty was paid in excess. So I have also paid interest on that excess duty. So that duty which I have paid in excess plus the interest that I have paid thereon, both will be allowed to me as a refund. Right? So therefore it is given duty or interest. Refund of duty or interest. Paid by him or borne by him. So paid by him means the importer himself. Borne by him means the buyer. So even the buyer can claim refund. May make an application in such form and manner as may be prescribed. So in exam you have to write prescribed form and in a prescribed manner for such refund to ACDC before expiry of 1 year from the date of payment of such duty or interest. Now see, this section gives a time of 1 year. Okay, but the two sections we just saw earlier, 26 and 26A, they gave 6 months, right? But they were specific circumstances in which refund was allowable. So in those cases, if you are claiming the refund, you have to claim the refund under 27 only. You are entitled under 26 or 26A, and then you make an application under 27. Understand this point. Section 26 and 26A do not give the procedure for refund. They only give the circumstance in which refund will be allowable. They only define circumstance. 27 is the procedure. So even when you claim refund under 26 or 26A, you have to file the application in this form under section 27. But what was the time limit defined there? The time limit was 6 months in both of those sections. So that time limit of 6 months will apply to you, okay, and not 1 year. So even though time here is 1 year, but if you are governed by 26 or 26A, then the time limit will be 6 months and not 1 year. Understood? So don't confuse later on. But in other cases, in any other case which is not governed by any other section, the time limit will be 1 year. Like for example, if I pay excessive duties by mistake and I want to claim refund, then the time limit will be 1 year from the date of payment of such duty or interest. Okay, from the date of payment. So when I paid the duty, excessive duty, from there 1 year will apply. And then the first proviso which is given there, as I have cut it off, you also do it. This was an old amendment, so it's not relevant now. Then second proviso says that provided further that the limitation of 1 year shall not apply where any duty or interest has been paid under protest. Underline this point, paid under protest. Now this is also an interesting concept. What it means is that when we had filed our bill of entry, remember we filed a bill of entry and we make self-assessment. So On the basis of bill of entry, our self-assessment was say 27 lakhs. We paid that tax. Okay, we paid that tax voluntarily on the date of filing the bill of entry itself. Then the officer assessed the duty. He checked our bill of entry and he said that no, you have to pay 7 lakh additional duty. Unless you pay, we will not allow clearance of goods. So I said, but I don't agree. I don't agree with your assessment. From my side, I don't have to pay anything more. But officer says that no, according to us, you are liable to pay 7 lakh additional duty. Unless you pay, we will not allow clearance of goods. So I say, okay, I have no choice, so I'll pay it. So when you make payment of that 7 lakh assessed duty or reassessed duty, you write there that you are paying this duty under protest. Okay, so there is a concept of payment of duty under protest. So I am protesting, I am not agreeing to it. So you have to write there in the challan that I am paying this duty under protest. If you do so, it means you reserve your right to go into appeal. You are reserving your right to go into appeal. That is the meaning of it, payment of duty under protest. I am not accepting it, I am not agreeing to it. So it is protest. So then you can file a appeal and you can file a refund claim later on. So in that case, this period of 1 year will not apply. Period of 1 year will not apply. Means you are open to file a refund claim any time thereafter. Any time. Even after 2 years, even after 4 years, even after 7 years, you can file the refund claim. Because you had paid the duty under protest. So then you go into appeal, and as and when you will win the appeal, you can file your refund claim. And the next proviso says that provided also that where the amount of refund claimed is less than 100 rupees, the same shall not be refunded. So as in case of we had seen earlier that more than 100 is the minimum amount. Less than 100 they will not entertain your claim. It's a very chiller claim. The cost of administration will be higher than that. So they said don't come, please don't come if you want to claim less than 100 rupees. Okay. And explanation says on the purpose of this subsection, the date of payment of duty or interest in case of person other than importer means buyer. For the buyer, if he wants to claim the refund, shall be construed as the date of purchase of goods by such person. Means if the buyer wants to go and claim refund, I have imported goods, I have paid excessive duty. So I paid the duty to government in January, imported the goods. Then in June, I sold the goods to you. Later on, we found in August or September in audit process that the duty was paid in excess. So I immediately call you, hey buyer, see that the burden that I have shifted to you is actually wrong, it was excessive, please go and claim refund from the government. So I will inform you, now you go and claim refund. So what will be that time limit for you? It's 1 year, and above it was given that 1 year starts from the date of payment of duty. I paid the duty to the government in January. So will your time of 1 year start from January? No. It will start from June when you buy the goods. So your 1 year, for the buyer, 1 year will start from the date he purchases the goods, not when the seller has paid the tax to the government. Okay. So that is also simple. Then subsection 1 is there. It says the application under 1 shall be accompanied by such documentary and other evidence. So this is theoretical point. Documentary or other evidence, including the documents referred to under 28C that we'll see, as the applicant may furnish to establish that the amount of duty or interest in relation to which such refund is claimed was collected from or paid by him, and the incidence of such duty or interest has not been passed on by him to any other person. So this is, you have to prove. You have to prove by documentary or the evidence that the duty was paid by you. So you can have your bill of entry and challans and all, or collected from you. Means if you are a buyer, you should have the invoice of the importer from whom you have purchased the goods, which should show how much duty you have paid, and then you have to also prove that you have not passed on the burden to any other person. Then save as otherwise provided in this section, the period of limitation of 1 year shall be computed in the following manner. So let's see. A. In the case of goods which are exempt from payment of duty by a special order under subsection 2 of 25, which we saw in this lecture, the first section, the limitation of 1 year shall be computed from the date of issue of such order. Okay, now let me explain to you this point. We saw section 25 just now, around half an hour before. What it said, that you can get special order exemption. Like I said that Farooq Haque got exemption for importation of car. Okay, but as we saw in that section, there should be circumstances of exceptional nature. So let's take an example, a real example. Though I would say the example that I'm going to give you now is a theoretical example, but the example that I gave you before was a real example. Sachin Tendulkar got exemption for his Ferrari car. That is a real example. That is what really happens. But now let's take a theoretical, good looking example, that if there is a flood situation somewhere in India, like we have got Kerala floods, and Farooq Haque, who has who is an importer, says that he wants to import 10,000 tents to be supplied as relief material to the Kerala flood victims. So I am importing 10,000 tents, good quality tents, to be supplied as relief material. And therefore I apply to the government that, look, this is a circumstance of exceptional nature. A lot of people don't have roof available with them, and we require a lot of tents to be put up there to be given as a relief to the victims. So government says yes, this is a good reason, so import the tents. So they grant me a special order exemption, then I'll import the tents and supply it there without payment of import duties. This is a good thing. But do you know, will the government act so fast in giving me the exemption? No, that's not going to happen. So though I may apply to the government today that, look, I am importing 10,000 tents, please give me exemption. But government says, okay, we'll see. Now will I wait for the government to see? By that time the flood will turn into a drought. And then will I import the tent? No, I have to import today. It's immediately required. So what I do, I don't wait for the government to grant me exemption. I import the tents and pay the duty. I pay the duty also. Remove them, supply it as a relief material. All the people are safe there. Very good. Then at the same time I have made application to the government. So after a few months, when the government considers it necessary and expedient so to do, and under circumstances of exceptional nature and all of the other conditions satisfied, then they will grant me an exemption. They will issue a special order. But I have already paid the tax. So once I receive the special exemption order, I will go and claim a refund of tax that I have already paid. Simple. So then this clause will apply. So exemption is given to me under special order, but exemption comes afterwards. I have already paid the tax before. So then I am entitled for refund. And the 1 year will be counted from the date of special order. Not from the date of payment of tax, but from the date of special order. So say for example I have paid the tax in the month of August, but the special order comes in December, then 1 year will start from December. Second, where the duty becomes refundable as a consequence of any judgment, decree, order or direction of any appellate authority, tribunal or court. So if this refund is coming out of court orders, you can say tribunal, court, appellate authority, then the limitation of 1 year shall be computed from the date of such judgment, decree, order or direction. So again, it will not be from date of payment of tax, but from the date of judgment, order or direction of the court. 1 year will start from there. Then where any duty is paid provisionally under section 18, we saw section 18 provisional duty. Provisional duty is when you are unable to ascertain the value or the rate of duty. You can apply to ACDC for provisional payment, right? Then he will tell us on what value or rate you should pay the duty. Then we'll pay the duty, then we clear the goods, and then within 6 months we go for finalization of duty. Remember section 18? Yeah, very good. So if the duty is provisionally paid, first of all the question is, can you ask for refund of provisional duty? No. Once we pay provisional duty, you cannot claim refund, you cannot ask for refund until the final order is passed. Understand this point. Until the final order is passed, you cannot ask for refund. So I paid provisional duty of 1 lakh. Then later on it was finalized at say 75,000. So I will ask for refund of 25,000. That's good. But then we find that 75,000 is also excessive. Actually the duty should only be 50,000. So I claim refund of another 25,000. So for that, what will be the time? 1 year from the date when you paid the provisional duty, or 1 year when that duty was finalized? 1 year will start from where? Provisional duty payment, or when it is adjusted against the final assessment. So here it says when it is adjusted against the final assessment. So 1 year will start from the date of final assessment and not the date of payment of provisional duty. So that is given here. The limitation of 1 year shall be computed from the date of adjustment of duty after the final assessment. Okay. Or in case of reassessment, the date of such reassessment. Then if on receipt of any such application the ACDC is satisfied that the whole or part of the duty or interest, if any, paid on such duty paid by the applicant is refundable, means ACDC is satisfied that the duty is refundable or the duty plus interest paid by the poor guy is refundable, he will make an order accordingly, and the amount so determined shall be credited to the fund. We have made the application, but the amount refundable will go to the fund. Fund means the Consumer Welfare Fund, like we had seen in GST also. It will be credited to Consumer Welfare Fund. Now the law is negative language. So first they say that it will be credited to the fund, but then it gives the proviso, means the exception, that look, wait. Instead of being credited to fund, allow it to the applicant in the following circumstances. So the proviso gives circumstances in which the refund will be given to you, the applicant, and not credited to the fund. But in any other case means where this proviso doesn't apply, the refund will be given to the fund and not to you, the applicant. Okay. So what are these cases? Let's see. So this proviso is also I would say subject to questions. Many times questions come on this proviso, that under which circumstances the refundable amount is not credited to the fund but allowed to the applicant. So you have to write these points. So it says be paid to applicant if such amount is relatable to the following. Now this list is exhaustive. First, the duty and interest, if any, paid on such duty paid by the importer or the exporter, as the case may be, if he had not passed on the incidence of such duty or interest to any other person. So first point is the same, that if I am the importer or the exporter and I have paid the excessive duty, and if I prove that I have not passed on the burden to any other person, I will get the refund. Means I am satisfying that I am not unjustly enriched. Unjust enrichment means that I have passed on the burden to the buyer and I also get refund from the government. So I will be unjustly enriched at the expense of the buyer. Buyer has incurred the burden and I get the refund. That's not justifiable. So if I get the refund, then it is called as unjust enrichment. So that is avoided by this point. that I'll be given refund only if I prove that I have not passed on the burden to any other person. Secondly, the duty and interest, if any, paid on such duty or imports made by individual for his personal use. Underline, individual for his personal use. So if I import some goods for my personal use, say for example I'm importing a television set, a big 85-inch television set, which is not available in India. So I went to Dubai some days back and I imported that TV. And on importation I have paid the duty. Later on, my chartered accountant tells me that this duty which is assessed is actually more, it should have been less. So I go and claim refund. So when I go and claim refund, will I have to satisfy the ACDC about passing of burden? No, because they are personal goods. If the goods are of personal nature, how can I pass on the burden to anyone else? I am not reselling the TV. It is for my own home use. I'll ask him, come to my home, I'll show you the TV and a match on that TV. Okay. Then third point, the duty and interest. So now when you write an answer, you don't have to repeat these words, duty and interest paid thereon. Avoid these. Just remember these points. Number one, you'll write if he has not passed on the burden to another person. Number two, if the goods imported were for his personal use. So you'll write accordingly. This is law language. Third, duty and interest, if any, paid on borne by the buyer. So third point is for the buyer. If he has not passed on the incidents to any other person, he will also have to prove the same point. So first is the importer, exporter himself. Third is the buyer. Fourth, the export duty specified under section 26. We just saw 26. The export duty that is refunded to you specifically. Then drawback, duty drawback that I was telling you under 74, 75. That is also claimed under 27 only. Procedure is here. So that is allowed to you specifically. Then the duty and interest, if any, paid on such duty borne by any other person or class of applicants as the government may by notification specify. Class of applicants, underline, class of applicants as the government may specify. Now this is an interesting point. This is very, 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 very politically motivated point. In this clause comes Ambanis and Adanis and who not, who are close to the government of that time. Whichever industrialist is close to the government at that time, government of that time, are benefited in this clause. So suppose Ambani has financed the government in its election campaign, and therefore the government is obliged towards Reliance, towards Ambani's. So whenever Ambani is setting up a new factory or something and is importing plant and machinery in bulk, government will first tell him that okay, you pay the duty, import the goods, and after you have imported the goods and you have paid the duty also, we'll give you a refund notification in your favor, and then you can go and claim refund of the tax paid. Interesting. Okay, so that is this point. Such class of applicants as the government may specify. So government can specify, suppose you are into power sector and you have imported plant and machinery. So government will specify that whoever is into power sector and he has imported plant and machinery within this period, maybe a 7 days period, maybe 10 days period, are entitled for refund. Go and claim refunds. Interesting. But we'll see this below, that this notification which the government issues in favor of few applicants, class of applicants, it has to be passed by parliament. It has to be laid in the parliament and passed. And secondly, they also have to prove that they have not passed on the burden to any other person. If Reliance has passed on the burden, then they will not get the refund. And last is G, the duty paid in excess by the importer before an order permitting clearance. Underline, before an order permitting clearance of goods for home consumption is made, where such excess payment is evident from the bill of entry in the case of self-assessed bill of entry, or the duty actually payable is reflected in the reassessed bill of entry in the case of reassessment. Reassessment means where the department has made the assessment. This is self-assessment. So what happens here, that I have filed a bill. I have filed a bill of entry and I have paid the duty. But the order of clearance is not yet given. Before before order permitting clearance. So order of clearance is not given, means I have not yet removed the goods from the port, okay, but I have filed bill of entry, I have paid tax. The next day I realize that I have paid excessive tax. Oh my god, we have paid excessive tax. Don't worry, go to the department, claim the refund. Order of clearance is yet to come. So if order of clearance is yet to come, there is no question of passing off the burden to any other person. So therefore in this case, the refund will be given to the applicant himself, that is the importer himself. Because the burden is not shifted now. Because the goods are not yet cleared. If the goods are not yet cleared, I am not able to resell. If I have not resold the goods, the burden is not shifted. So therefore refund will be allowed to me, the importer, exporter, as the case may be. Okay. Then proviso says that no notification under clause F, the reliance one, of the first proviso shall be issued unless in the opinion of the government the incidence of duty and interest, if any, paid on such duty has not been passed on to any other person. Means unjust enrichment concept applies here also, even for clause F. And point number 3 says that notwithstanding anything to the contrary contained in any judgment. Now this is the overriding effect. Subsection 3 gives the overriding effect. And what it says, that even if you have won a case in the court of law, even if you have won a case in any other kind of law tribunal and so on and so forth, no refund will be given to you unless you satisfy the conditions of subsection 2. Means unless you fall in all these categories above, the proviso. Unless you fall there, you are not entitled to any refund. So this gives overriding effect. So it says notwithstanding anything to the contrary contained in any judgment, decree, order, direction of appellate tribunal, national tax tribunal, courts, or in any other provision of the act or regulations made thereunder, or any other law for the timing in force, complete overriding effect. No refund shall be made except as provided in subsection 2. Understood? And subsection 4, is there no need to study this? It only says that this notification that was issued in clause F, those special category of people, specified class, that notification is to be laid before both houses of parliament. Means the government has to inform the opposition parties also that we are giving exemption to Ambanis and Adanis and who not, and Farooq Haques, and then passed by the parliament. And parliament can modify or even negate this notification. And lastly it says that for removal of doubts it is hereby declared that any notification issued under clause F, that is Ambani's Adani's, of the first proviso, including any such notification approved or modified under 4, may be rescinded by the government at any time by notification in the official gazette. So if the government changes, say today BJP government is there, so they have given some benefits to their industrialists by giving them exemption and refund this thing, refunds. But if the government changes and the new government comes in, they can go and cancel, means rescind those notifications. So it keeps happening. Suppose the next government is of Congress, they will change the notifications issued by BJP Sarkar. And then there is 27A, interest on delayed refunds. So 27 says that allow refund. 27A says that if the government makes a delay in giving refund, then they have to pay interest. Interest can range from 5 to 30%, and right now the rate of interest is 6% per annum. So the government will give you refund at the rate of 6% per annum. If they make a delay beyond 3 months, underline, beyond 3 months from the date of receipt of application for refund. Very simple one. In that also the proviso is not to be read, and even the explanation is not to be read.